Hey everybody, income aficionados. Really, what a week it was. I mean, we just keep bouncing. I'm not that surprised. As you know, I've been very bullish. I've been talking about this sort of grind towards 6,600 on the SPY. And here we are. It's happened. We keep shrugging off negatives after the close, of course, or during the day, rather, yesterday, we had a big sell-off on Elon and Trump kind of duking it out a little bit. And we just came right back again, right? We had AVGO earnings that were pretty good. We'll take a look at those in a moment, but we'll talk a little bit about the good, the bad, and the maybe. I think there's a lot of good out there. Here we go. Implied volatility. So all that means is option pricing keeps dropping across asset classes. We can see the VIX. So this is equity option pricing, which means that people are getting a little bit more relaxed about things, right? They're getting a little bit more calm. It can take some time after what we went through in the first part of April. It can take some time for people to start forgetting about that tumultuous time and for that fear level to come out, to kind of melt out of the market. And we can see that across classes. We've got gold vol coming down. When I say vol, just option pricing. We see credit, oil, rates as well, which is interesting because that's sort of the place to watch, right? We saw things get a little bit scary in the rate environment in bonds in early April, and we want to see that risk worry, that premium come out of it to feel a little bit better about things. So we'll take a quick look at the very happy picture we see in VIX term structures, right? So all this means, you don't have to know too much about this, except that this is a happy picture, a nice, beautiful contango, everything kind of rising up and up and up. The VIX below. We still have a slightly high VIX. We're about 17, so we could get just maybe a tad lower than that. But at the same time, very happy picture. This is very good for the short volatility products like the SPIXs, SPXYs. So what we're really seeing in the systematic world is very much kind of steady buying. We can kind of see short term that in an uptake, we have a little bit of selling going on. So that's a little bit of a flip. We definitely have these vol targeting funds and things like that that need to keep buying. That's going to lend support to the market. But at the same time, we have CTA, which is sort of another sort of systematic kind of thing that happens out there, commodity trading advisors, but stuff about commodities, all kinds of systems consider themselves CTAs. But over the next month, we kind of have buyers again in an uptake. So what happens, if you look at this chart here, you can see that in a big sell-off, we are going to indeed start to get selling from all over the place. If we get a sort of lesser sell-off, we're going to see a little bit of selling. But if things stay normal, that actually brings buying in. So why that kind of gives you some insight into why this market, if it isn't going down, it's actually kind of not really sitting still. It's kind of pushing up and up and up towards that 600 magnetic level because you have this sort of embedded buying going on there. And a lot of people have gotten out of this market. Hedge funds are not in the Mag 7. A lot of very smart money, as they call it, institutional money, is still on the sidelines. Retail has gotten back into this market, and there are an awful lot of pro managers out there looking in through the window going, oh my goodness, I am about to underperform if this market melts up. And I've been talking about on various shows, I think we could get this melt up. AI is going to be the thing that takes us up, as well as positioning. People are just not in this market. It's one of the most hated rallies we have ever seen. I've been doing this for 3 decades. I have never seen a rally this big where so much smart money has not gotten back into the market. That represents potential fuel to the upside as well. So Broadcom, amazing earnings, going along with my theme of AI going on to that next leg of inference, really starting to take over from that training. Still lots of training because the whole world wants a piece of this action, but inference starting to pervade its way throughout the economy, starts to become very monetizable for companies, for individuals, helping productivity. Very big thing. So we can see that this kind of company, Broadcom, the NVIDIAs of the world, semiconductors, which I positioned nicely in there. We have a turbo trade in the SOXX. We have an NVIDIA turbo trade as well. So we actually, SOX is just an income trade. NVIDIA is a turbo trade. So positioning in many of these things, I'm actually looking at a very special one, which if you join Turbo Income, you're going to get on Monday. I think it's one of the coolest, underrated semiconductor ideas out there that I think has massive upside if what I think is about to happen starts happening. So these are the picks and shovels of the industry. Very good to watch. Well, why have people rotated back into MAG? Well, Look at Flavor Flav right here. He says, believe the hype in this case because the earnings are there. Look at surprises versus consensus. Same old story. Mag 7 keeps knocking it out of the park. Do not fight it. These stocks have run a long way, but I would be buying any sort of reasonable dips at this point. We can see here Magnificent 7 PE premiums versus the S&P 493. What's the 493? It's every other stock in the S&P 500 except the Mag 7. We still have room. Even though these things have run up, we still have room for things to get exuberant, right? I'm not saying things are super cheap. They're not extremely expensive, but we have the ability to get more expensive. Look at this change in consensus. The rest of the market down 3%, 4%. Guess what's still hitting on all cylinders? The Magnificent 7. And we can see here P's still have a bit of room to expand there. And I think the rest of the market actually can look pretty good too. I think we're going to start getting rate cuts at the end of the year. Maybe the IWM is starting to sniff that out. IWM starting to break out. Let's take a quick look at that chart. Look at the IWM here. That is the Russell 2000 ETF. I did not think it would do this, but look at it. It's starting to pop up above this spot here, which served as resistance for quite a long time. Look at my MTI. We've got a nice uptrending solid yellow and pushing into the green today. Green plus a breakout above this level. I am definitely watching this. What I do want to see along with that is confirmation from the TLT, which I'm not yet getting. We see the TLT coming down here. If we start to get a little bit of a move up in TLT to 87.5 towards 88, that could confirm IWM. Why do I think that? Because IWM needs lower rates. This is a massive 40% of this index requires lower rates in order to basically exist. They do not make money. They borrow tons of money. And we need to get rates down for a pretty large swath of the economy to start doing well again. And that's very meaningful for employment as well. There are a lot of companies that are not S&P 500 that employ people. So we need that to happen. And I think that's a very exciting part of what I'm seeing there in the IWM. So let's take a look at mega cap growth tech positioning. This is what I was talking about earlier. Ample room to buy. Look what they say here. Ample room to buy. 19th percentile of positioning in mega cap and tech. Are you kidding me? Nobody is in this area with AI starting to break out again. This is getting weird, but it could serve to push us much, much higher. I've been talking about a melt up potential and it could very much be happening. Is it going to, we're keeping the VIX under control because we have a heavy weighting in the S&P, in the VIX, in MAG. MAG is very heavily weighted. That could keep a lid on VIX, even though there's something going on below the surface, right? We can have movement as people jockey for position. We call that dispersion, things moving up, things moving down, but the MAG stocks could be keeping that kind of low VIX overall. So look for the VIX to kind of remain fairly tame while underneath the hood, we could see people moving around the possibility of AI really starting to disrupt a lot of industries, a lot of companies. So again, at TLT, my MTI was showing just blood red last week when I did the state of the market. And now we're starting to see some yellow, right? So I'm starting to get a little constructive on TLT. I've been adding some positions, some in the money calls, in fact, and some TLT itself. When it's yellow, let it mellow. So this is actually probably an income type trade right now. I want to see option pricing just get a little bit higher before I want to grab that income. Right now, it just isn't quite juicy enough for me. So, but I do like what I'm seeing. I'm starting to see an improvement in direction. Remember, direction of volatility is very, very important. Not just the absolute level of volatility. You want to see things trending in the right direction. When volatility is rising sharply, do not start doing things that are going to get you into trouble. You are heading into the eye of the storm. You are maybe in the eye of the storm. When volatility starts to trend down, that is what you want to start seeing in order to get a little bit more constructive on upside as well as income trades. We need stability for income trading. So some exciting things going on, of course, in our filtration process. Currently, we're looking at this scan, quality growth stocks, which we figure out, we pop in, we look for stocks that are acting well, we look for the right volatility levels, option pricing levels, and then we filter down into that 1 or 2 or 3 stocks every week that are going to make us some money. We are positioned very nicely in some trades this week. We are going to have some new ones. I mentioned that one to you. Monday, we're going to be talking about that one in Turbo Income. Make sure you check it out. I hope everybody has a fantastic weekend, and we'll see you next week.